There's never been a better time to invest in real estate. The government is practically paying you to invest in real estate right now. The reason is because of 100% accelerated depreciation. What does that mean? You get 100% accelerated depreciation with something called cost segregation study. If you've invested in real estate in the past few years and you haven't done a cost segregation study, this video is for you, and do it ASAP. I just finished one on one property and about to start one on another property that I just closed on. First of all, the IRS says that residential properties will depreciate over 27.5 years and commercial properties will depreciate over 39 years. That means that your asset, the property, is going to depreciate. It's worthless if you do nothing to it for 27.5 years or 39 years for commercial. You need to constantly renovate and update it. Since you're doing this work, the IRS gives you a tax break and says that you can depreciate those renovation updates over the 27.5 years that it deems necessary in order to keep it up, and divide that, over 27.5 years. However, what 100% accelerated means that you can actually accelerate that total depreciation value into the first year, 100%. In past years, it was only a percentage of this. It wasn't 100% until recently. In 2023, it began phasing down the 100% over each year from the 100% that started in 2017. 80% in 2023, 60% in 2024, and it was supposed to be 40% in 2025. With the new legislation, it brought it back up to 100% in 2025 and in 2026. Not only that, it made 100% permanent going forward. How do you take advantage of this? How does this actually help your tax code? The answer is by doing a cost segregation study. And what a cost segregation study is looking at all the assets that depreciate on your property, adding a price that it would take to update them over time, calculating all of those costs, and that total is what the 100% means. That total you can deduct. That entire total, you don't have to wait 27.5 years for residential, 39 years for commercial. That entire amount you can deduct from your tax without waiting the period of time, 27.5 or 39 years. Land is not included in this. It's just real estate property. For example, if you're buying $1 million, just to make simple math, property, then you can do the cost segregation on that $1 million property. Let's assume that the land is worth $200,000 and the building is $800,000. $800,000 divided by 27.5 years is approximately $29,000 per year. Instead of deducting only $29,000 per year, you get to actually combine it up front and deduct $250,000 that year. And from my other videos, if you have REP status, if it's a long-term rental or midterm, or if it's short-term rental and you already get